Welcome back. Today we got the first merged HDFC numbers and its advances have grown from 16 lakh crore in March pre-merger to 22.5 lakh crore today post-merger. Now to support this, HDFC Bank has been aggressively raising deposits over the last few months. This aggression has already had an impact, as you will see, on the cost of funds of other banks. Every single bank that has announced its early numbers this quarter, IndusInd, Federal, RBL, Karur, Bandhan, all of them have reported at least a 2 percentage point drop in their CASA. We don't know the cost of deposits. Only one bank has revealed its cost of deposits. AU Small Finance has said that cost of finance has gone up by 30 basis points to 6.58% in Q1. Remember, this is the quarter when bond yields fell by 40 to 50 basis points. So, what's the overall impact of this merger on the banking sector and the NBFC sector? I have with me Mr. S.S. Mundra, former Deputy Governor, Reserve Bank of India, and of course, 40 years career banker. Suresh, Ganapathy, banking analyst, Macquarie Capital Securities, and Lakshmi, Iyer, CEO Investment Advisory of Kotak Investment Advisors. Gentlemen and Lakshmi, thank you very much for joining. Mr. Mundra, first up to you, sir. You expect this war on deposits to be continuing for maybe a year or two because HDFC's loans will start maturing?
Latha, first of all, I think what you mentioned in the beginning, and you talked about the fall in CASA. Now, if CASA has grown, it cannot be on the, pricing power. CASA, if someone CASA has fallen and somewhere it has gained, it will be more on efficiency and service offering rather than on the cost of fund. So let's first, so it means the original premises on which we are beginning to discuss itself is yet to be proved. We'll have to look from that angle.
But actually, I didn't get the cost of deposits. Banks have not revealed it. So I had to go for the nearest proxy. But cost of deposits, AU Small Finance has revealed, and that's gone up 30 basis at a time when market yields fell. That was my limited point.
Of course, the small finance bank, they will not be the comparable. But yes, I would mention it like this, that with this whole merger, of course, this is not something new. And the last 2 years, if you look at it, the Indian banking sector, the merger was the flavor. So we had the SBI and then we had the mergers, consolidation in public sector bank. All that has been happening. But here, in case of HDFC, I think both on liability side and asset side, they would need to do a lot of course correction and some of the things to comply with the regulation. And obviously, they will have to compete in the market for the deposit. And yes, I agree with you. That would have some impact on the rate of deposit being offered. That is one impact which may happen at the industry level. Other than that, I don't think that the rest of the players in the industry are going to be affected by any other element of this merger.
Okay. Yeah, but cost of raw material is very big, sir. If everyone is going to be paying probably 30 basis more, like AU Small Finance, or maybe 20 basis more.
I don't think that everyone will pay 30 basis points.
Okay. I guess State Bank will not have to pay. Yeah. I guess, big banks will not have to pay. But Suresh, what's your outlook? Do you see this deposit paying for banks continuing for some time because of one guy getting terribly aggressive? And also on the asset side, this is a behemoth which will now start giving home loans cheaply because, their cost is less than HDFC's cost. So on both sides, Suresh.
Yeah, first on the liability side, couple of clarifications here. Latha, the QOQ dip in CASA has got to do with the seasonal aspect because 4Q sees a huge amount of float in the system. And therefore, if you're comparing 1Q versus 4Q, definitely the numbers will look down for all of them, including HDFC Bank. So there has been actually an absolute decline in CASA, and that could be more due to current accounts. So don't read too much into the QOQ decline in CASA.
Point taken from both of you, yes.
Yeah, and having said that, see, there is definitely going to be enormous pressure on resources, and you're not looking at it for the next 3 months, 6 months perspective, because if the combined entity needs to grow at 18 to 20%, say for the next 4 years, the extent of deposit mobilization also needs to be to that great an extent, 18 to 20%. Now we have seen obviously deposit growth picking up, but that's got to do partially with the 2,000 rupee in a way demonetization. But if I were to adjust for that, HDFC Bank's incremental deposit requirements could almost be 20% from a market share perspective, and SBI has another 20-25%. So almost two banks put together take away 50% of the overall resources in the market. So it will be too naive to assume that there is not going to be any pressure on resource mobilization. There will be continuous pressure for every bank in the system because of this behemoth trying to grow a bit more aggressively. What it means is that it keeps a floor for the rates. Rates are not going to come down. Rates may not go up, but at least they will remain at elevated levels. And the cost of deposit increase has got to do with the fact that banks hiked deposit rates last year, and now the repricing is actually happening with a lag. And you will see happening throughout the course of next 4 quarters. So that's on the liability side, where we see continuous pressure. Just one final point on the asset side. There is going to be enormous competition in the mortgage segment. Know that HDFC Limited was a bit conservative in the way it went about trying to grow its mortgages portfolio. I think home loan portfolio. That is not the case with HDFC Bank. They have, of course, a wider reach, a wider branch network, a bit more they will do in affordable housing. And it really, you really have to see how the system evolves, mainly because of the fact that mortgage is the single most let me put it this way, loan segment which has been growing pretty strong over the course of last 5 years. And one bank coming and getting a bit more aggressive with the scale and size of HDFC Bank will definitely have implications for a whole lot of players in the system.
Okay. Let me come to the NBFC space, which is why I invited Lakshmi hurriedly. Lakshmi, one big fellow has moved out in the NBFC space. So have funds gotten cheaper for NBFCs and HFCs?
Latha, clearly in the HFC space, we have seen, spread compression. So those AAA rated HFCs and maybe some of the AA plus also, which were raising money at higher than HDFC, obviously because of the fact that one large behemoth supply is not going to be there, are trading at par or maybe even marginally lower. I think that's going to be the par for the course incrementally because of no supply from HDFC as an HFC anymore.
So both NBFCs and HFCs will benefit, you think? I mean, well-rated ones.
There is obviously within the NBFC space, largely the mutual funds were the large holders, for example. There, obviously, we've seen some spread compression and the absolute yield levels have come down. So, yes, psychological impact will definitely be there, but the bigger impact has been on the HFCs.
Mr. Mundra, on that, sir, you think NBFCs now can flex a bit? Or do you think that actually HDFC getting along with HDFC Bank will make life more difficult for HFCs on the asset side?
Okay. Latha, I think we have to look separately whether we are talking about NBFC or HFC. Okay. So HDFC being a pure play HFC, I think that releases some space there. But having said that, my take is like this, that growingly the what they call it, the harmonization of regulation which was happening from RBI between the NBFCs and bank, and particularly for HFCs, because there was a separate release of framework, if you recollect, where the HFCs were given a certain direction, a roadmap within which they have not only to achieve a certain percentage of the loan eligible for calling as housing loan, but within that also individual loans and other loans. So with all that, it was increasingly becoming difficult to maintain the current, say, avatar of these entities. Probably that was also one of the thought behind accelerating this merger. So my take is that while yes, there would be some relief in the market for both NBFCs and HFCs, because if someone is going to market for raising the fund, doesn't matter whether it is a HFC or it is NBFC. That is one part. But second, which I look at it, that this housing finance market probably there would be more acceleration of co-lending between the banks and the other housing finance companies which are there in the market, because the banks will have pressure now. What Suresh was also talking about on the asset side of the HDFC Bank to accelerate the mortgage, and everyone would not be able to do it from their own books. So probably co-lending, which is already getting momentum, will get the further momentum. That is how I look at it.
Mr. Mundra, very quickly, a bank can't fund land purchase. That space opens up for more NBFCs, you think, more business for them?
I don't think that in itself is going to be a very game changer. And when it comes to that, even NBFCs or HFCs would be really cautious about it.
Okay. Well, actually, I was speaking to someone in L&T Realty, and they have tied up with HDFC Capital Advisors or something. They see that as an area where there will be less competition because HDFC is not there. Suresh, the other big question is, can you really grow a 23 lakh crore balance sheet, liability book at the same pace? Remember State Bank, when it was 22, State Bank was 20 lakh crore like 3-4 years ago before the merger. They could, they always grew lower than the banking sector. Do you think HDFC can lead such a large number and still grow 20%?
No, look, I think, Latha, it is definitely a daunting task when it comes to the liabilities front. On the asset side, I think growth should not be a challenge to the way the economy is growing. And of course, the fact that the unorganized sector is moving to the organized sector. So the asset side of the balance sheet, there is no concern. Definitely on the liability side, it is a daunting task. Having said that, look, they are opening up 1,500, 2,000 branches every year. Cash transactions are still pretty heavy in the market. So clearly, that's another opportunity. As and when they penetrate deeper into the markets, there is new source of deposits which can come through. They are definitely better in terms of technology. And, if you look at it over the last, we have been tracking this sector for the last several decades, I would say. Over a very long period of time, Latha, the PSU banks lost the market share on loans, but they protected that turf on deposits. Whereas we look at the last 6-7 years data, they have started losing market share on the deposits also. So clearly that is only going to get a bit more accelerated over the course of next 5-6 years. And that gives HDFC Bank a bit more amount of an opportunity. So yes, it's a daunting task, but as I said, with their kind of execution capabilities and track record, they can manage to get that 18-19% deposit growth.
Well, just winding up comments from you, Mr. Mundra, do you think that leading such a large entity for a 20% run can be tough? As well, does it mean that, you can't just be a retail bank when it is such a large bank? Probably corporate will get a bigger look in.
Yes, that I agree. I mean to say is going to be tough, but not impossible. And I think the track record which the entity has shown should give us reasonable comfort that yes, it will be doable. Of course, my sense is for initially a year or two, journey would be little more tough because a lot of adjustment would be needed to be done to also come within the regulatory framework. But then it should smoothen. That is how I look at it. And yes, I agree with you. See, while we say that, okay, see, already with this merger, the housing loan portfolio of HDFC Bank would have become bigger than SBI, which itself had a substantially big housing loan portfolio. So I don't think being a bank and also having the requirement of risk framework, sectoral deployment, sensitive sector, all those things will come into play. So it cannot be just, that you grow only the housing finance or retail. I think they have already started looking at corporate sector in recent past, if I'm not mistaken. Probably they would have a still more intense look in that sector now.
Okay.
And economy is supporting that.
Yes, certainly. Thank you very much, Mr. Mundra, Suresh and Lakshmi. Out of time, but I think the key takeaway is that immediately the next 2 years you are going to see deposits on the uptick, because as the HDFC loans mature, its liabilities mature, they will be replaced by deposits and therefore the pressure will continue. HDFC Bank also has the daunting task of reaching the priority sector 40%, for which they have been given 3 years. So there will be that pressure, but the word from the veteran, SS Mundra, is that given HDFC Bank's track record, that 20% still looks doable. On that optimistic note, wrap up on Bazaar Chart. Busters update.